Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 3rd of November 2017. I just wanted to let people know that tomorrow I have a free online event at 11:15 Pacific time, and that is I'll be talking about swing trading using the volume weighted average price. You can go to AlphaTrends.net with this post. I will have a link, so take a look at that. Equities this week had a positive week, except for the Russell 2000. So let's take a look at the charts and make some sense of it. Here we see a 15-minute chart, meaning each one of these candles represents 15 minutes worth of data. You can see the time frame up in here. So for the week, that means that we started right out over here on Monday, and we had the Federal Reserve, which gave us just a little bit of jitters, but really not much happened. And it was a good positive week for equities once again, with that rising 5-day moving average, the intermediate term trend. The buyers continue to get the benefit of the doubt. When we back it up a little bit to a 65-minute time frame, you can see here that we are making higher highs and higher lows. We had a small shakeout, and what we'll be looking for next week, now down to a 30-minute time frame, right in that's the moving average actually, but I could drop that down and you can see 30-minute time frame right there. But what we're looking at here on this 30-minute time frame with the 5-day moving average is the fact that we had a little bit of a shakeout, but that shakeout found support. It found buyers right where it was supposed to, and in this area where we've seen some congregation of volume weighted average price levels from this gap lower, this gap higher, and from this low, all kind of coming together in that same general area. So 256 will be the important level for next week. For the NASDAQ, we saw that the volume weighted average price from the gap, recent gap that is, held on a closing basis each day here, and we also closed above this rising 5-day moving average. So right now we have a little bit of importance in the very near term at the 152 level. I would think that that would become the first level of support on any pullbacks from here, and then down to 150.75 to 151 would be the next important level. This market is at all-time highs, so it's difficult to be anything but bullish. If you think the market is up too much, that's fine. Just continue to have a plan for getting out. It doesn't make sense to short a market because you think it's up too much. The market doesn't care what any of us thinks. Our job is to listen to the message of the market and adjust our positions accordingly to what the market says. The market's not going to adjust according to what we think, so we listen to price action. If next week we come down and break through 152, we will get a little bit more cautious, and if we broke below 151, well, then that's something we would have to observe and see how it gets there. And that's why I do this analysis every single day for subscribers at alphatrends.net. The Russell 2000, as we saw, did lose ground here this week, down about 80 basis points, and that group has been a little bit of a laggard recently, but it really isn't losing much ground. It's just staying in this range in here that we've seen. I've pointed out a couple of volume weighted average price levels that I think are important. First, from this gap early September, and you can see we've been closing above that each and every day, and below that would be well, then we would have the 50-day moving average. And it's nice to see that the 50-day moving average is rising up, and what we're seeing happening is that this market is correcting more through time than through price, meaning that there are still buyers in this market. They're not just wholesale sellers trying to get out. There are buyers down there rescuing it on the bid each time it comes down into this little area right in here. And sometimes we see a little shakeouts through that level just to scare people out of their positions, but realistically we're in a longer term uptrend. If you look at the weekly time frame, it's hard to argue anything but bullish right there, and this is looking like a correction through time, which are typically resolved through a resumption of the primary trend, which of course is higher. So I'm looking at the Russell 2000 going into next week as neutral. We don't want to get too excited, especially when it gets up to the top end of that range. If we want to see a breakout of this range, the best way for it to happen would be for it to run up to there, get rejected, come back down, make a higher low, and then go. That way we would have a nice higher low right in here to set a stop under, rather than giving it all the way down to the bottom end of that range. So it's always about how does the market break out, not just does it break out? Where has it come from? How much energy has it expended getting to that point? Semiconductors just continue to blaze higher. Let's look at those numbers again, because year to date up 43.6%. Just an amazing run for the semiconductors, and just technology continues to dominate. So the semiconductors pulled back briefly this week, but nothing, no damage done on that brief pullback. And of course, you've got to be a fool to try to short into this strength. We've seen it over and over and over again. We continue to close not even above just the 20-day moving average, but above this rising 10-day moving average. We had one little, two closes below the 10-day moving average since this move right here in September. So just super strength in the semiconductors. If you don't like what you see, you're better off in the sidelines in cash rather than being in and wondering why the market's wrong. The market's not wrong. The market is right. It is rewarding the people who are on the right side of the market, which of course is long. Now the biotechs came down to this trend line that we've seen that basically came off of the election low. So this is just right at the election. We saw that hit in June, and then now again this week we bounced from that trend line. I don't think that the worst is probably behind for the biotechs right now. I think it's still possible we might come back down and test the year-to-date volume-weighted average price, which of course anchored from the January 1st. That would get us down into 303, which was also this prior band of resistance and then held as support here. Now, that's what we have the possibility of, but when we look at a shorter-term time frame, we want to observe and say, what is the market actually telling us? Because it doesn't care what I think is likely to happen. Instead, we want to look at it and say, actually, let's go back to the daily time frame. We've got a declining 10, 20, and that 50-day moving average is starting to decline a little as well. So I think you have to look at this as we could get a bounce in here, maybe even up to 325, but we would view it with a higher level of suspicion because that 50-day moving average is now starting to flatten out and decline. From an intermediate term perspective, it's good to see we did close back above that 5-day moving average. And for a real purchase, to make a higher high above a flat to rising 5-day moving average, I think if you're looking for a short to intermediate term trend, I'd like to see either it runs up to that level, pulls back, and then gets going, or the other scenario, which I think would make it a lower risk entry, would be that maybe it just kind of does a little bit of back and forth in here, builds energy, that 5-day moving average creeps up. But again, it's about risk reward and of course knowing your time frame. So right now I think that the biotechs are probably just a good avoid. So if you're in Las Vegas, I'd like to see you stop by and say hello at that event. The details for it are on alphatrends.net. Hope you had a good week, and I'll talk to you next week. Thank you.